Good morning, friends. I hope you all are doing well in this pandemic situation. As we are aware, the Institute of Chartered Accountants of India have postponed their May 2020 exams to June and July exams. So, majority of you have got a good chance to capitalize this time period which has been extended. I hope you all are doing well, staying home and staying safe, as well as preparing for your upcoming examinations. Today, here we are about to talk about certain amendments that are applicable in your May, that is probably June, July income tax examinations. Those recent amendments which have taken place, those amendments which were applicable previously, as well as those which are essential from the viewpoint of exams. As you people are aware, any circular or notifications which have been issued up to 31st of October 2019 is applicable for your June July 2020 examinations. We will be taking up only certain amendments which are important from the viewpoint of exams, as well as those which have been made as a part of your syllabus. We'll be starting first with surcharge. Friends, as you know, surcharge is an additional amount of tax which is being levied on a specified class of people, those having their income above certain limit. You must be aware that surcharge is a tax which is calculated on your tax payable. It's a tax on tax. Moreover, you are aware with the slabs which are applicable for your examinations. Let me just recapitulate those slabs. If your income from 5 heads, grossing up or summing up your 5 heads of income, that is salary, profit and gain from business and professions, capital gain, income from other source, and house property. You'll sum up your income from 5 heads, calculate your deductions under chapter 6A or under section 80, and find out your net income. You'll be calculating tax on this net income. And if this net income does not exceed 50 lakh, then surcharge is not payable. Here we are talking about individual HUF. Let me clarify that. That means if the income of individual or HUF does not exceed 50 lakh during relevant previous year, after calculating income from 5 heads, deducting your deductions and net income, in that case, no surcharge is payable. However, if your income exceeds 50 lakh, but it is less than 1 crore, again, income exceeds 50 lakh, it is less than 1 crore, surcharge is payable at 10% on such tax calculated on the income. Be careful, friends. Surcharge is not payable on the income, surcharge is payable on the tax calculated on the income. That means if your income is above 50 lakhs but less than 1 crore, first step what you will do is you will calculate your tax as per the slabs applicable. 0 to 250, 250 to 5, 5 to 10, 10 or more, and 10% surcharge on the tax that is calculated. Will not go much depth into the calculation of the tax and surcharge, as you are well aware of that. Moving ahead, let me again recapitulate. If your income is less than 50 lakhs, no surcharge is payable. If your income is greater than 50 lakh but less than 1 crore, your total surcharge payable is 10% on the tax calculated. If your income is more than 1 crore but less than 2 crores, your total surcharge is 15% payable on the tax. If your income is more than 2 crore but less than 5 crores, then your surcharge is 25%. And if your income is greater than 5 crores for an individual or an HUF, then your total surcharge is 37% on tax payable. So in brief, 50 lakhs, up to 50 lakhs, no surcharge. 50 lakhs to 1 crores, 10%. 1 crore to 2 crore, 15%. 2 crores to 5 crores, 25%. 5 crore or more, you'll be paying 37% surcharge. Now, the amendment which is applicable for your June, July 2020 exams. First basic change is, or the first thing which has not changed is your rate of surcharge. It has remained same. However, there has been certain change in the income that you will calculate for the calculation of tax and surcharge. Now, as per the amendments for your exam, I will bifurcate this income, the income that is coming from 5 heads: salary, business and profession, capital gain, income from other source, house property. Calculate the 5 heads of income or income coming from the 5 heads. deduct your deductions under chapter 6 or section 80 and come to a net income on which you will calculate the tax. Now after arriving at the net income, you need to allocate your income into two parts. Yes friends, be careful. You need to allocate your incomes into two parts. First part, any income which is coming from short-term capital gain under section 111A and income coming from long-term capital gain under section 112A. That's your first part. I'll be dividing my income into two parts. My first part is income from short-term capital gain under section 111A and income from long-term capital gain under section 112A. That's your first part. And your second part is remaining income, be it salary, business, capital gain other than those calculated on the first thing, house property, as the case may be. Divide it into two parts. Again, the first part made up of two things, short-term capital gain under section 111A and long-term capital gain under section 112A. Second is your 5 heads of income, remaining other than this two. Now how will you calculate your surcharge? Be careful. Again, up to 50 lakhs, your rate is 0. You won't be paying any surcharge. If your income is more than 50 lakhs but less than 1 crore, the entire income surcharge is payable at 10%. That means again, as per the previous law, again it will remain same. If your income is more than 1 crore but less than 2 crores, again your calculation will remain same. On the entire income, no bifurcation in two parts. Entire income surcharge payable is at 15%. That means up to 2 crores. If an individual or an HUF is having an income up to 2 crores, the calculation of surcharge remains same. But if an income exceeds 2 crore, that means if an income is more than 2 crores but less than 5 crores, traditionally the surcharge was 25%. However, as per the recent amendment and the amendments which are applicable for your June-July 2020 exams, if an individual or an HUF is having an income which is more than 2 crores but less than 5 crores, and that income is made up of either short-term capital gain under section 111A or long-term capital gain under section 112A. Again, if an individual or an HUF, his income is more than 2 crores but less than 5 crores and is having an income from short-term capital gain under section 111A and long-term capital gain under section 112A. To sum up in a short summary, what is short-term capital gain under 111A? It's a sale of shares which are held for less than 12 months, which are sold through a recognized stock exchange, STT has been paid, which are taxed at a specified rate of 15%. Short-term shares sold through recognized stock exchange, taxed at a specified rate at 15%. Those are short-term capital gain under 111A. Long-term capital gain under section 112A. What is long-term capital gain under section 112A? Previously under section 1038, any long-term capital gain, that means if shares, securities or any shares which are being, or mutual funds, equity oriented mutual funds, shares, securities or equity oriented mutual funds which are held for more than 12 months, sold through a recognized stock exchange on which STT is paid. Long-term shares sold through a recognized stock exchange and STT is paid were exempt under section 1038 previously. Now with an amendment, this has been taxed under section 112A at a specified rate of 10%. So short-term capital gain under 111A or long-term capital gain under 112A. If an individual or an HUF is having an income from this two as well as others, and his income exceeds 2 crores but less than 5 crores. Here we are talking about only one slab, more than 2 crores, less than 5 crores. What we'll do is find out your 5 heads of income, gross it up, reduce your deductions under chapter 6 as applicable, find out your net income. Now this net income will be divided into two parts. Your first part is comprising of income from 111A and 112A, and your remaining part will be the other income. On 111A and 112A, surcharge continues to be taxed at 15%. That means even if your income is more than 2 crores but less than 5 crores, and if you are having an income from short-term capital gain under 111A and long-term capital gain under 112A, you will be taxed, or your surcharge would be at 15% only. On remaining income, your surcharge will be 25%. That means income greater than 2 crore, I'll again sum it up. 2 crore less than 5 crores, 111A, 112A, that's the first part, remaining income, that's the second part. 111A and 112A will be taxed at 15%. Your remaining income will be taxed, or will be surcharge will be levied at 25%. Similarly, if an individual or an HUF has an income exceeding 5 crores, again gross up your 5 heads of income, deductions, remaining income divided into two parts. First part comprising of 111A and 112A, remaining income. Again 111A, 112A will continue to be taxed at 15%. Surcharge will be calculated at 15%. Remaining income will be calculated at 37% as your income is greater than 5 crores. So friends, if you sum up this amendment, your amendment is applicable only if your income exceeds 2 crores, if it is more than 2 crores, less than 5 crores, or if it is more than 5 crores. We'll be talking here only about individual and HUF. And if you are having an income from 111A or 112A, then you need to bifurcate your income after calculating the 5 heads of income, deducting your deductions, remaining income divided into two parts. Surcharge on section 111A and 112A continues to remain at 15%, irrespective whether your income is more than 2 crores, less than 5 crores, or more than 5 crores. It will be surcharged, taxed at 15%. However, remaining income will continue to be taxed at your previous slab rates. That is, if it is more than 2 crores, less than 5 crores, at 25%, more than 5 crores, it will be taxed at 37%. So friends, that's your surcharge. Next, talking about profit and gain from business and profession, one of the most important and the lengthiest head from the viewpoint of exams. Under section 32, as you are aware friends, we calculate depreciation, which is basically calculated based on the number of days an asset is used. Quite aware, if an asset is used for more than 180 days, depreciation is calculated for the complete year, and if it is used for less than 180 days, depreciation is calculated at half rate. Now, as per the recent amendment applicable for your June-July examinations, be very careful. If an SSC is having a motor taxi, which is other than those which is used for hiring purpose or as a motor lorry, that means it's a motor taxi which is other than those which is used for hiring purpose or as a motor lorry purpose, which was previously taxed at 15%, which is taxed at 15%. You are aware motor taxis are taxed at 15%, but if that motor taxi has been purchased between 23rd of August 2019 to 31st of March 2020, that means if that motor taxi, which is other than used for motor lorry or hiring purpose, and it is acquired and put to use, from 23rd of August 2019, 31st of March 2020, your rate of depreciation is 30%. Be careful friends. It's a motor taxi which is other than those which is used for hiring purpose or lorry purpose or transportation, and if it is acquired only between 23rd of August 2019 to 31st March 2020, only then it is 30%. If it is acquired before, your tax rate your depreciation rate continues to remain at 15%. Be careful here, there is importance of dates, 23rd of August 2019 to 31st of March 2020. Similarly, if it's a motor taxi which is used for hiring and lorry transportation purpose, so the only change is the first amendment was motor taxi other than those which was used for hiring and lorry purposes or transportation purpose, your tax rate was 30% if purchased between 23rd of August 2019 to 31st March 2020. Similarly, if there is a motor taxi which is purchased or which is used for hiring purpose or motor lorry purpose between 23rd of August 2019 to 31st March 2020. So basically you are going to remember the date. You can learn it in this manner. Any motor taxi, let's talk it about any motor taxi purchased between 23rd of August 2019 to 31st March 2020, divided into two parts. Any motor taxi purchased between 23rd of August 2019 to 31st March 2020, divided into two parts. First part, it's a motor taxi other than those which is used for hiring purpose or lorry purpose, motor taxi which is used for hiring purpose and lorry purpose. If it is other than those which is used for hiring purpose and lorry purpose, your tax rate is, or your depreciation rate is 30%. And if it is motor taxi used for hiring purpose or lorries, it is 45%. Summing it up, friends, motor taxi purchased between 23rd of August 2019 to 31st March 2020, divided into two parts. It's a motor taxi other than those which is used for transportation lorry purposes. Motor taxi used for transportation and lorry purposes. If it is other than that used for transportation and lorry purposes, your rate of depreciation is 30%. If it is used for taxi transportation purposes, your rate of depreciation is 45%. That was your profit and gain from business and profession. Now talking about one of the most important amendment which was made in Finance Act 2019, and that is an insertion of a new section in TDS called section 194N. As you are aware, friends, our beloved Prime Minister has an agenda of getting our country into a cashless economy. With a view to that, he has inserted a section called section 194N. Now what is this section 194N? Any person who withdraws cash from any bank or cooperative society into the activities of banking or finance purpose, and if that withdrawal any time during previous year. Now friends, this section or this amendment or circular came into the picture which made it applicable from 1st September 2019. Made it clear that if your withdrawals any time during the previous year from a bank, either in a single amount or in aggregate, exceeds 1 crore. That means if a person is having a business and if he withdraws more than 1 crore in aggregate, that means 20, 50,000, 5 lakh, 10 lakh, 40 lakh, 50 lakh in aggregate during the previous year. If it exceeds 1 crore, TDS at 2% will be made applicable on that amount. On the amount which is exceeding 1 crore. That means if your withdrawals during the year is 1 crore 10 lakhs. The date when your withdrawals exceeds 1 crore, remaining amount TDS will be deducted, that is TDS at 2% on 10 lakhs will be deducted by the bank as on the date of payment. Now here important thing is which is to be considered is the sum is in aggregate, friends. That means you'll be having certain cushions. Say for example, if I'm having more than one banks, I'm having an account in Axis Bank, I'm having an account in SBI. Say for example, I've withdrawn 1 crore in Axis Bank, I've withdrawn 1 crore in SBI. So who would deduct tax? Will it be Axis Bank or will it be SBI? To be very frank, there is a lot of discussions going on in the market with regard to this, and at presently from the viewpoint of your examination you will be at the privilege, because if the banks are aware, then yes, there will be a question of TDS. If the banks are not aware, then I'm sorry friends, TDS won't be deducted because it is calculated. Bank will be calculating the withdrawals from its own account, so you'll be having an advantage if you're having multiple accounts. Even SBI, if your withdrawals during the year exceeds 1 crore 10 lakhs, or if it exceeds 1 crore, TDS will be deducted at 10 lakhs on 10 lakhs at 2%. Now the important thing here is this circular made it that applicability from 1st September. However, withdrawals will be calculated from 1st April 2019 to 31st March 2020. That means this came into the picture, was made applicable from 1st September 2019. But for the purpose of calculation of that withdrawal of 1 crore in aggregate, you will be calculating that withdrawals from 1st April 2019. So friends, if a person has withdrawn 90 lakhs till 31st of August 2019, has withdrawn 20 lakhs from 1st September, that does not mean that we'll calculate this 1 crore from 1st September. Calculation of 1 crore will be done from 1st April. So as on the month of September, his withdrawals are 1 crore 10 lakhs. And yes, TDS will be deducted by the bank. Now there are certain class of people who have been exempted from payment of or from TDS. And those certain class of people have been notified by RBI, who are basically into money exchanges or money dealers. They are also known as cash replacement agencies or white label automated teller machine operators, basically those who are feeding the money into the ATMs on the part of banks. Importantly, commission agents or traders of an APMC or any other person registered under agriculture law in the country, this section is not being made applicable. That means if you are a trader or a commission agent in an agriculture product marketing committee, who is a person acting on behalf of the farmers or selling vegetable items on behalf of the farmers, they basically deal in cash because farmers majoritarily are being paid in cash. To those persons, this section is not applicable. For remaining all, this section gets mandated. So these are the amendments, friends, which are applicable for your June-July 2020 exams. These were the basic amendments which are being posted by ICAI, the changes which have been made applicable. Remaining, you must have been covered up while preparing your different heads of income as well as while preparing for your examinations. The next sessions will be coming up with such important changes and amendments with regard to indirect taxations for your June July 2020 exams. Thank you, friends. See you soon.